The story of the first Bank of the United States is one of deep political intrigue, economic innovation, and ideological divides that helped shape the future of the U.S. financial system. It was a battle of visionaries on one side, Alexander Hamilton, the first Secretary of the Treasury, and on the other, Thomas Jefferson, one of the founding fathers who would vehemently oppose the creation of such a powerful institution. The early years of the United States were not easy. In 1790, the nation faced a massive debt crisis. The Revolutionary War had left the young country deeply in debt, and there was no centralized banking system to manage it. States had their own debts, and the federal government was struggling to make its own payments. Alexander Hamilton saw an opportunity. He understood that in order for the United States to grow, it needed a stable financial system. Without a centralized bank, the country couldn't effectively manage its debt or raise the funds necessary for its survival. And so the idea of the first Bank of the United States was born. Hamilton's vision was clear: to create a national bank that would manage the country's finances, stabilize the currency, and help fund national projects. He proposed that the federal government charter a bank, similar to the Bank of England, which had proven essential in the stability of the British Empire. The bank would serve as the country's central financial institution, offering services like holding government deposits, making loans, and issuing paper currency. It was a bold idea, an institution that could control the country's finances, something that had never been attempted in the United States before. But not everyone was on board with Hamilton's vision. Opponents of the bank argued that it would concentrate too much power in the hands of the federal government. Thomas Jefferson, the nation's third president, was particularly vocal in his opposition. Jefferson believed in a limited government, with power resting more with the individual states. He argued that a national bank would favor wealthy elites and would give too much control over the economy to a centralized government. In his view, it would erode the rights of states and ordinary citizens in favor of big business and financial elites. This disagreement between Hamilton and Jefferson wasn't just a matter of differing opinions, it was a matter of fundamental ideology. Hamilton, as a Federalist, believed in a strong centralized government capable of managing the nation's finances and securing its future. Jefferson, on the other hand, was a Democratic Republican who championed the rights of states and feared the concentration of power in the hands of the federal government. The debate over the bank soon became a battle over the very nature of the American government. Hamilton's supporters argued that a strong central government was necessary to maintain order, encourage trade, and protect the interests of the nation. They believed that without a national bank, the U.S. would struggle to survive in an increasingly complex and interconnected world. On the other hand, Jefferson's supporters argued that a national bank would undermine the principles of the American Revolution, principles that emphasized liberty, limited government, and the protection of individual rights. Hamilton's supporters, including George Washington, the nation's first president, managed to push through the creation of the bank in 1791. Despite fierce opposition, Congress passed a bill that allowed for the creation of the first Bank of the United States, with a charter that would last 20 years. The bank was established in Philadelphia, and it was designed to be a private institution, though it would hold government funds and have the power to issue currency. But the creation of the bank didn't bring an end to the debate, it only intensified it. Opponents of the bank, led by Jefferson, continued to voice their concerns. Jefferson and his followers saw the bank as a tool of the elites, a way for wealthy financiers to control the country's economy and ensure their own prosperity at the expense of the common people. They feared that the bank would lead to an overly centralized government that would impose its will on the states. For years, the battle over the first Bank of the United States raged on. The bank's charter was challenged in the courts, and its future remained uncertain. But despite the ongoing controversy, the bank proved to be a success in many ways. It helped stabilize the national economy, facilitated trade, and provided loans to the government. It also helped establish the U.S. as a credible financial power on the international stage, allowing the country to borrow money from European creditors. However, the creation of the first Bank of the United States also deepened the political divisions in the country. Hamilton's vision for a strong federal government was at odds with Jefferson's ideal of a more decentralized republic. The debate over the bank became a symbol of the growing divide between the Federalists, who supported a strong central government, and the Democratic Republicans, who advocated for states' rights and limited government. The struggle over the first Bank of the United States was more than just a financial debate, it was a reflection of the broader, ideological divides that would shape the nation's political future. It set the stage for the development of political parties in the United States, with Hamilton's Federalists eventually giving rise to the modern Republican Party, and Jefferson's Democratic Republicans forming the basis of what would become the Democratic Party. While the first Bank of the United States was successful in many ways, its legacy is a complicated one. On the one hand, it helped to stabilize the U.S. economy and set the foundation for the modern American financial system. On the other hand, it symbolized the growing divide between those who wanted a strong federal government and those who believed in the importance of states' rights. And ultimately, its charter was not renewed in 1811, largely due to the influence of Jefferson's political heirs and the growing opposition to centralized banking. But the principles behind Hamilton's vision didn't disappear with the bank's dissolution. The idea of a central bank would be revisited in the coming years, culminating in the creation of the Federal Reserve in 1913, which continues to serve as the central banking system of the United States today. The debate over the role of government in the economy and the need for a centralized financial institution remains as relevant today as it was during Hamilton's time. In many ways, the first Bank of the United States was the birth of American financial policy. It set the stage for the development of modern banking systems, the regulation of credit, and the creation of institutions that continue to shape the global economy. But it also marked the beginning of a political battle that would continue to play out in the decades to come. Hamilton's bank may have divided the country at the time, but it also laid the groundwork for the nation's future economic success. As the first Bank of the United States faced political and ideological challenges, its creation proved to be a double-edged sword. While it was instrumental in stabilizing the economy and establishing the United States as a financial power, its existence continued to deepen the political divide between the Federalists and the Democratic Republicans. In the 1790s and early 1800s, this division wasn't just about economics, it was about the soul of the nation. The Federalists, led by Alexander Hamilton, saw the bank as a necessary tool to unite the states under a strong central government. For Hamilton, the country's financial health was tied directly to the strength of its federal institutions. A national bank could help the U.S. raise revenue, maintain a stable currency, and support national debt repayment. To Hamilton, the bank wasn't just a financial institution, it was a cornerstone of national unity and strength. However, Jefferson and his supporters feared the opposite. They believed the bank would give too much power to wealthy elites and centralize control in the federal government's hands. They saw it as a threat to individual freedoms, local economies, and the autonomy of states. For Jefferson, the idea of a national bank was a direct challenge to the values of the American Revolution. The Revolution had been fought to free the colonies from centralized British power, and Jefferson believed that Hamilton's vision was steering the country back into a system that resembled the very tyranny they had just overthrown. By the time of Thomas Jefferson's presidency, the first Bank of the United States had already weathered years of political debate. Jefferson's administration, however, was not in favor of renewing the bank's charter in 1811. With the growing influence of states' rights supporters and the decline of the Federalists, the first bank's charter was allowed to expire. The bank was dissolved, but the financial principles it introduced had already taken root in the United States. The dissolution of the bank marked the beginning of a new chapter in American finance. It didn't, however, signal the end of centralized financial oversight. Just 2 years later, in 1816, the Second Bank of the United States was created, but it too would become the subject of political controversy. Once again, the debate over a national bank would divide the country, this time with Andrew Jackson leading the charge against the institution. Jackson, much like Jefferson before him, believed that a central bank was a tool of the elite and a threat to the common people. In the 1830s, Jackson's battle to destroy the Second Bank would come to a head, culminating in his veto of its recharter in 1832. This battle was not just about banking, it was about class power and who should have control over the nation's economic future. Jackson's victory over the bank was a defining moment in American politics. It was the final blow to the idea of a centralized bank controlled by the federal government. For many, Jackson's success symbolized the triumph of the common man over the wealthy elites. But Jackson's triumph was also controversial without the bank. The U.S. faced instability in the financial system that would eventually contribute to the Panic of 1837. The destruction of the Second Bank left the country with an absence of centralized financial oversight. For decades, the U.S. struggled with economic instability, and the federal government had no means of regulating or controlling the national currency. This lack of a central bank would contribute to many of the financial crises and panics that plagued the country throughout the 19th century. In the absence of a central bank, the U.S. economy was left vulnerable to market forces, with wild fluctuations in the value of the dollar and uncertainty about the country's ability to pay off debts. But despite the challenges, the American economy continued to grow, and the financial system would eventually evolve into something more sophisticated and structured. The creation of the Federal Reserve System in 1913 marked the beginning of a new era for American banking. The Federal Reserve, unlike the earlier attempts at a central bank, was established with the aim of providing stability, controlling inflation, and ensuring the smooth functioning of the national economy. The Federal Reserve continues to serve as the central bank of the United States, playing a crucial role in regulating the economy and managing monetary policy. Looking back, the story of the first Bank of the United States is a powerful reminder of how deeply financial systems are intertwined with the political and social fabric of a nation. The debates over Hamilton's vision, the creation of the bank, and the subsequent struggles for and against centralized banking show how financial institutions can shape national identity and policy. Hamilton's original vision may have been defeated temporarily, but its legacy can still be seen in the Federal Reserve and the broader financial system that governs the U.S. economy today. Hamilton's plan for a national bank ultimately reshaped the U.S. financial system. Though the first bank was dissolved, the principles of centralized banking and debt management did not fade away. Instead, they laid the groundwork for the financial institutions that would emerge over the coming centuries. The United States went on to become the world's most powerful economy, largely due to the financial systems that Hamilton, despite fierce opposition, helped to create. Today, when we look at the Federal Reserve or the national debt, we're seeing the long-term effects of Hamilton's vision for a centralized financial system. His ability to foresee the economic needs of a growing nation was a testament to his brilliance. However, the resistance he faced from figures like Jefferson and Jackson reminds us that the creation of financial institutions is never just about economics, it's about power, politics, and who gets to control the flow of wealth. In the end, the story of the first Bank of the United States is about more than just a financial institution. It's about the birth of the modern financial system, the political battles that shaped it, and the ongoing tension between centralized control and individual freedom. Hamilton's vision may have been contested and imperfect, but it undeniably shaped the trajectory of the United States and its position in the global economy. And while the first bank was dissolved, its influence can still be felt in every financial transaction that takes place today. From the U.S. Treasury to the Federal Reserve, Hamilton's legacy continues to guide the nation's financial policies and its economic future.